raising the money, keep raising the money, you know. And these are some of the things that some of us need to start understanding how it's working, and then, you know, and that's one of the things that we are trying to encourage from this challenge. Moving on to the ground rules. Like I said, we have 2 rounds. We have the round 1, which we cover from accounting, auditing, finance, and IT in finance. And then it's going to be MCQ, multiple choice questions. And each school, these are the rules. I mean, I want to believe that we already understand it, right? Sounds good. But for the sake of the audience, so that they can be well carried along, they also need to understand. For the first round, it's going to be MCQ, and each of the school will have a representative that will answer the question in 30 seconds. They can discuss within that 30 seconds for who is going to answer. They can discuss, and then somebody just needs to answer. And I mean, if 2 people answer at the same time, it's going to be a miss mark. Yeah, so we are all aware, and it's not like, oh, you realize you didn't do well. Yeah, that's well communicated. Then the second round, for the first round, it's just for one person within the school to answer the question. So, in fact, one person can decide to answer everything as long as the person knows the right or correct answer. Then for the second round, it gets more interesting. We then have SAQ, short answer questions. And this will also cover accounting, finance, audit, and IT and finance. In this SAQ, what is going to be there is that one person can still answer, but without discussion. One person answers without discussion. And also, you must be using the exact word for you to get the correct, for you to get your 5 points. And somebody can say, why exact word? Because in IFRS 15, for example, somebody can say there is something deferred revenue, deferred income, and all these things. But do we have deferred revenue in IFRS 15? Yes or no? It is a no, because according to IFRS 15 recognizes contract liability for what many of us are calling deferred revenue. And that is exactly what we are trying to promote here as well, so that people can be well studied and they can actually do the right thing, and they can advise business owners across the globe to do the right thing. So for the last round, and now it gets so much interesting, round 3, I call it face-off. Round 3 is a face-off. It's going to be comprising of 6 questions across the different areas that we are covering today. And in the face-off, without saying the question, one person is going to come out to represent the school and then pick a number, and then the person answers, right? And without discussion. All of these things are going to be happening in 30 seconds to respond to the questions. Okay. Okay. While we are waiting, just some more moments, just 1 or 2 technical glitches. But while we are having technical glitches, let me just help us with something. So there is this thing that we've seen. I can see my guys at the top in the house here and there, and I can see my colleagues as well. And a lot of us are professional accountants here, so we can relate with this. We once seen an account that has a negative revenue. And then I throw to my people as professional accountants, oh, okay, thank you so much. I think we are up, so I'll be posting that, and we are going to be entering the competition or the challenge proper. Thank you so much. So can we bring it up? Okay, it's up. Okay, since we are up, we are just going to be, just give me some moments. I need to sort I need to ensure that it's completely a leveled playing ground. Okay, while we are waiting for that, again, I do ask students this question, and because many people do not, many accountants knows how to follow the rules better than engaging in critical thinking, and that is one of the reasons why I feel like many many business owners take a whole lot of accountants for granted because they feel like you just know how to follow the rules. You are doing backlogs, it's historical, accounting is this, accounting is that. They are not seeing the values in the accounting. And once in a while like this, once I have opportunities like this, I do throw challenge to some of my young professional colleagues I do throw some of this challenge to my fellow professional colleagues, most especially the younger ones, to exercise their brain muscle, which is that I ask them, in what situation do you think we can have a negative revenue? What do you think must have happened for us to have a negative revenue? And I'm asking because we've seen this in practice. And it's not just seeing it. It was an audited or supposedly audited financial statement. Right? We have a negative revenue. So let's think. Who can tell us? I mean, you can give us countless of reasons. Why do you think we can have a negative revenue? What do you think must have happened? Okay, the timer. Okay, thank you. Okay. I need. Okay. Not leveled any longer. Okay, that's fine. Okay, I think we are going to get started now. And we are going to be starting from. Okay. Yeah, we are going to be starting from the UNN guys. Again, we are in round one now. The time is 30 seconds. We probably just need to move on regardless. So the time is 30 seconds. I'll be doing the timing over here. And I really need us to be super fast with this thing because right now, I'm not so sure we are able to get the timing on the screen. But yeah, please, let's be time conscious. The time is 30 seconds. And as soon as I'm done reading the question, that is when the time starts counting as we've agreed. So, the round one for accounting. Oh, good. The time is up. Thank you so much. Okay, so the round one in accounting, we have 30 seconds, which starts immediately after the question must have been read, right? So you have to choose between we have from question 1 to 30. So you can choose anyone within question 1 to 30. So, UNN guys, please question, what are you taking?
Question 7.
Question 7. And I read, which accounting principles allows a company to record expenses incurred in a period, even if the cash of those expenses has not been yet paid? A, the revenue recognition principle. B, the full disclosure principle. C, the matching principle. And D, the conservatism principle.
Question again.
Which accounting principle allows a company to record expenses incurred in a period, even if the cash for those expenses has not yet been paid? A, the revenue recognition principle. B, the full disclosure principle. C, the matching principle. And D, the conservatism principle.
Matching principle.
Correct answer is C, the matching principle. Correct. Then we have the OAU. Please, you have to select between question 1 and 30. OAU, please.
Question 8.
Question 8. The assumption that a company will continue to operate for the foreseeable future is known as dash. A, time period assumption. B, monetary unit assumption. C, going concern assumption. And D, economic entity assumption.
C, going concern assumption.
Correct. Please, let's appreciate them. Thank you. Unilag, please.
Number 9.
Question 9. Interesting. The accounting concept that guides a company to record revenue when it is earned, regardless of when cash is received, is A, cash basis of accounting. B, accrual basis of account. C, full disclosure principle. And D, materiality concept.
Accrual.
Correct. Adeleke University.
Number 9. Number 12.
Fine. Number 2. 12. Okay, thank you. Question 12. Which of the following cost is not included in the cost of inventory under IAS 2? A, purchase price. B, freight in. C, storage cost for finished goods. And D, import duties. Which of the following cost is not included in the cost of inventories under IAS 2? A, purchase price. B, freight in. C, storage cost for finished goods. And D, import duties.
Storage cost for finished goods.
Wrong. The correct answer is storage cost for... Okay, did you say... What did you say? Just
Storage cost for...
Okay, that's correct. Thank you. Please, let's be audible, please, so that we don't cause drama. Thank you. Please, let's be audible. Okay. Then Redeemers University.
10.
Back to you. Okay, tell me.
10.
Number 10. According to revenue recognition principle, when should a company recognize revenue from the sale of a product? A, when the customer's cash payment is received. B, when the product is delivered to the customer and the company has a right to receive payment. C, when the customer places the order for the product. And D, at the end of the accounting period in which the sale occurred.
B.
Correct. Okay, we move to finance now. I'll start from Redeemers University still.
17.
17. Question 17. A company has current assets of 150,000 naira and current liabilities of 100,000 naira. What is the current ratio?
1.5:1.
Correct. OAU.
Question 10.
Question 10. That's fine. The CFO is typically responsible for which of the following? The chief financial officer is typically responsible for which of the following? A. Managing the firm's IT infrastructure. B. Overseeing all financial activities of the firm. C. Leading the sales and marketing teams. And D. Managing the firm's human resources.
B.
Correct. UNN.
Question 1.
Question 1. Interesting. A project costs $100 and will generate a single cash flow of $110 in 1 year. What is the internal rate of return? Again, a project costs $100 and will generate a single cash flow of $110 in 1 year. What is the IRR?
No options.
A, 5%, B, 10%, C, 15%, and D, 20%.
B 10%.
Correct. Adeleke.
Number 18.
Number 18. The quick ratio is more conservative than the current ratio because it excludes which asset from the numerator? The quick ratio is more conservative than the current ratio because it excludes which asset from the numerator? A, account receivable. B, cash and cash equivalent. C, inventory. And D, prepaid expenses. The quick ratio is more conservative than the current ratio because it excludes which asset from the numerator? A, account receivable. B, cash and cash equivalent. C, inventory. And D, prepaid expenses. Time is running. Come again?
Inventory.
Please use the options. C, inventory.
C.
Thank you. Correct. Unilag, please.
9.
Question 9. That's fine. The goal of wealth maximization is best achieved by a financial manager who focuses on a project that is A, short-term profit, B, long-term cash flows and their risk, C, immediate revenue, and D, return on assets. The goal of wealth maximization is best achieved by a financial manager who focuses on a project that is A, short-term profit, B, long-term cash flows and their risk, C, immediate revenue, and D, return on assets.
B.
B. Okay. Correct. And then we move to the next round. Audits. And I will still go for Unilag. You have between question 1 and 30. Please go ahead.
15.
15. Am I right?
Yes.
Acceptable audit risks of 5% implies planned assurance of approximately A, 90%, B, 95%, C, 5%, and D, 99%. Acceptable audit risk of 5% implies planned assurance of approximately A, C, 5%, and D, 99%.
$95.
Correct. Adeleke?
Number 22.
22. Which ISA deals with forming an opinion and reporting on financial statements? Which ISA deals with forming an opinion and reporting on financial statements? A, ISA 700, B, ISA 705, and C, ISA 706, and D, ISA 720.
Please come again.
Which ISA deals with forming an opinion and reporting on financial statements? ISA 700, ISA 705, ISA 706, and ISA 720.
D, 720.
Wrong. ISA 700. Financial statement review. 4AU, please.
Question 5.
Question 5. Which control type is most relevant to mitigating risk where primary controls are not fully effective? Which control type is most relevant to mitigating risk where primary controls are not fully effective? A, manual preventive controls, B, automated application controls, C, detective-only controls, and D, compensating controls.
Question again.
Which control type is most relevant to mitigating risk where primary controls are not fully effective? A, manual preventive controls, B, automated application controls, C, detective-only controls, and D, compensating controls. Time is ticking.
B.
Wrong. The correct answer is D, compensating controls. Redeemers. Redeemers University.
16.
Question 16. Under ISA 315, understanding the entity and its environment does not include A, internal control relevant to the audit, B, applicable financial reporting framework, C, management risk assessment process, and D, the auditor's firm level quality control procedures.
Sir, questions again, please.
Under ISA 315, understanding the entity and its environment does not include A, internal control relevant to the audit, B, applicable financial reporting framework, C, management risk assessment process, and D, the auditor's firm's level quality controls procedure.
D.
That is correct. UNN, please.
Question 6.
Question 6. Question 6. Which procedures provide the most reliable evidence regarding the existence of cash balances? Which procedure provides the most reliable evidence regarding the existence of cash balances? A, review of bank reconciliation, B, inspection of clients' held bank statements, C, analytical procedure, and D, external confirmation directly from the bank.
Options again.
A, review of bank reconciliations, B, inspection of clients' held bank statements, C, analytical procedure, and D, external confirmation directly from the bank.
D.
Correct. Then from Redeemer as well, again, we move to the IT in finance. Please, what question? Between 1 and 15?
14.
Question 14, thank you. Blockchain is best described as dash. Blockchain is best described as dash. A type of database that stores data in blocks linked together. B, a tool for drawing financial charts. C, a password management system. And D, a file compression tool.
Options again, please.
A type of database that stores data in blocks linked together. B, a tool for drawing financial charts. C, a password management system. And D, a file compression tool.
A.
Correct. UNN, please.
Question 1.
Question 1. Thank you. Which software is commonly used for creating financial models? Which software is commonly used for creating financial model? A, Photoshop, B, Excel, C, PowerPoint, and D, SQL.
B.
Correct. Okay, Unilag.
12.
12. Okay, question 12. Which of these is an example of RPA, robotic process automation in finance? Automated invoice processing, handwritten checks manually, design tools, preparing PowerPoint slides. Which of these is an example of RPA, robotic process automation?
Options again.
Which of these is an example of RPA in finance? automated invoice processing, handwritten checks manually, designing tools, and then preparing PowerPoint slides.
Please, the options again, but slowly. We can't hear you.
Automated invoice processing, handwritten checks manually, designing tools, and preparing PowerPoint slides.
A.
Correct. Then OAU, please.
Question 5.
Question 5. Question 5. Which type of financial tool is Microsoft Excel? Data visualization tool, spreadsheet, cybersecurity tool, and database management tool. Again, A, data visualization tool, B, spreadsheet, C, cybersecurity tool, and D, data management system.
Spreadsheet.
Correct. Then Adeleke. 11. What is the main purpose of automation in finance? What is the main purpose of automation in finance? A, to create social media posts. B, to reduce manual tasks and improve efficiency. C, to increase layoffs. And D, to avoid paying taxes.
B.
Correct. Okay, because of our time, we'll just move to the round 2, which will be SAQ. So, yeah. And Redeemers, we are moving to round 2. And I'll be starting from Adeleke. In accounting, you have question 1 to 11.
Question 1.
Question 1. Dash is the agreed price between willing seller and buyer in an orderly transaction. Dash is the agreed price between willing seller and buyer in an orderly transaction.
Fair value.
Correct. Okay. Let's go for OAU.